Good evening. This is the Elliott wave update for the S&P 500 and the NASDAQ 100 for Monday, May the 8th, 2023. I'm going to begin tonight with an apology, and that apology is that I moved a little bit too quickly when I did my update last night. I was feeling a bit pressured because I was running late in getting the update published, and therefore I kind of rushed through making my adjustments to the labeling and to what actually had occurred. And I want to give credit where credit is due for a couple of subscribers who have kept me in line, basically, by putting out some comments, showing me, it's like, wait a minute, what about this? What about that? Which forced me to go back and review. And now I have updated the count one more time. But so I want to give credit to Tim primarily, and giving him credit for letting me know that I actually had a rule violation. As many of you that have been following me for as long as I've been publishing here on YouTube, I am very, very strict on rule violations. So Tim, thank you again for making that clear to me so that I could go back, even though I had said that I moved it to a line chart, which is on a closing basis, and looked very quickly. And so I was wrong. It was a rule violation. So thank you, Tim. A couple other people have also mentioned about switching the account and giving up on a primary B wave, and I am not. And so that remains in place, but I truly appreciate the comment and what was behind it. I think it's great that we can have an ongoing conversation here, which would include your opinion and your work, Elliott, or your analysis, which may run a little bit differently than mine, but I appreciate the conversation when it can be on the positive side in coming up with a good resolution or just a change on my part. So I'm going to begin here tonight with the S&P. We continue to be within an intermediate C wave, which is up. So it's a C wave up, which in turn will complete the primary B wave. But with the current action, I had felt initially, I had shown like last week, that the high at 4206 had completed the minor wave 5, and in turn the intermediate wave C, and then in turn the primary B wave, and felt that intermediate C was actually ending in a failure because it did not take out the high of wave A, which currently is at 4252. Upon review, and then initially last night, I rather quickly shifted the count to putting this as minute wave 1 of 5 and this as minute wave 2 of 5. So showing that we're still in this C wave, I'm going to go down to the hourly chart and let's take a look. So again, you don't see the internals because it really clogs up that chart in the 4 hours. But this would be minute 4 and this would be minute 5 to complete that minor wave 3. Then we have a double ABC down. ABC X ABC to put in wave 4. And that overlap does not, it doesn't create the problem right now. So wave 4, minor wave 4, which I had here, shifted over, and minor wave 4 is now complete at 4062.25, and that was the low from last Thursday. So Friday's activity was the beginning stages of minor wave 5. So now let's take a look at the Elliott relationships between wave 5, minor wave 5, and minor wave 1. Elliott discussed that the most common relationship that we'll find is that we measure out wave 1, and that minor wave 5 will be equal in length to minor wave 5. So we have equality, what he considered equality. And that would place the high for minor wave 5 at 42.95. Minor wave 1 was 232, almost 233 points in length. So if we add that to the low of minor wave 4, we're going to come up with 42.95. Now, that for sure will push wave C into a new break that high of wave A to complete wave C. That makes it actually a very clean picture. Now, does wave 5 have to be equal in length to wave 1? No, it does not. In fact, it can come in between. But here's what the guidelines, here's what Elliott gave us as guidelines. The most common is equality. Wave 5 is equal to wave 1. The second would be that wave 5 is equal to 0.618 of wave 1. Now that puts us right there at that high of wave 3 at 42.06. So that would be where wave 5 would be 0.618. And if it just got over that high of wave 3, which is 42.0625, and the actual number where minor wave 5 would be 0.618 of minor wave 1 is 42.06.50. So it's a squeak. It's a squeak if it did it. But there's always that possibility we can just shift a little bit higher. Ultimately, I really would like to see, and have actually been saying all along, I really would like to see this C wave do get at least equal the A wave, if not get above it, to put in a cleaner completion point that really truly will set us up for the beginning stages of the primary C wave. Now, the last would be in terms of Elliott and comparison of wave 5s against wave 1. Wave 5 would be equal to, last comparison would be wave 5 would be equal to 1.618 of wave 1. And that actually comes in at 44.3950. Now, we've got enough out there, and the market continues to really try to figure what it needs to do. Am I seriously going to be looking for 44.3950? No. Actually, no, I'm not. And here's why. I believe that we have enough fundamental and other just problems that are surrounding and can affect our markets in a big way. The biggest of which remains right now to be the debt ceiling conversation. The debt ceiling and combining with, well, we better see cuts in the budget or we won't allow a debt ceiling to pass. That conversations begin tomorrow. So I think that the market will continue to hang its hat on waiting and anything that comes out of that meeting and how it's going to be interpreted, and then what a market reaction should or should not be. So the second would be also that we do have some additional earnings, but this week in terms of economic numbers, we have CPI on Wednesday and PPI on Thursday. If they continue to show improvement in the inflation, I would anticipate that we're going to get a pretty strong reaction. Now, if we end up on on Wednesday, approximately at the same level we're at right now, 100-point pop in the S&P, I don't think would be out of the question. If we start moving up and hit our next resistance level at 41.75, or even make it up towards that previous high at 4,200, which I do suspect that 4,200, that area, plus or minus, will be defended by sellers. So I think that there's kind of a line, and the next one up would be that 42.55 area that'll be defended by sellers. So if we're getting up, inching our way closer to completing minor wave 5, and we get a decent CPI number and then a decent PPI number, is it a stretch to really think that the market can get to 42.54? Is it a stretch to think the market could get to 42.95? I'm going to say no. So again, part of the theory is if we break strongly enough above 4,200, it should be a clean shot and an easy shot for the market to quickly move up towards to 43. I don't disagree with that, but I think we will meet resistance at 42.55. And then again at 42.95, just below 4,300. I think they'll start to defend these levels by selling. So again, those are the three things, plus the earnings reports I think we'll do out this week is Disney and PayPal of the larger expected reports. And I don't believe from what I'm reading thus far that they're expecting superior, blow the doors off type earnings reports from those companies. We'll have to wait and see, of course. And I know that Disney's on Wednesday. I'm not sure about PayPal, but I know Disney is on Wednesday. So making these revisions makes me a lot more comfortable in visit or seeing what the account actually is. And again, I want to review very quickly what really caught me, and I felt it could have been a wave two, and that is in the SPX. Now, in the SPX, we can look and we see this actually was 3 waves down, which is why I left it as a 2. But here again, it on a line chart, and this is where I was checking, on the line chart, it did not, the body of the bar did not violate the low body of this bar, which is why I accepted it. In the future, though, which is where I was placing it, the body did violate, and it did break the rule. So again, I thank the subscribers who brought that to my attention. My bad was taking it off of SPX and not double checking it over on the ES. Now, so if I'm placing 3 and the 4, we're here within this fifth, and same fibs will line up pretty cleanly. So here we just need to get above 41.87. I believe that's 41.87. 41.86, 87, we'll call it that. And then we can step out a little bit further to see the high of wave A is 41.97. So again, as we get closer, these numbers can be reached as well for wave C to put in a clean high without any failures to deal with. So that lines up cleanly. So again, what we're really looking at here is that we are likely going to have additional upside. Today, we saw both, and not overtly strong. And basically, for the majority of the day, it was slow with pretty low volume. Let me just double check. We can get a grand total here before they reopen. They took it all away. From when I checked last, the E-mini was still below 1 million contracts, which is very light day for the S&P E-mini. And the NASDAQ mini was below 500,000, which is pretty low. So a lot of people just standing back waiting, a look and see type of a deal. But they still managed to pin it at 41.50, so or thereabout. Okay, so we still have the 50 period moving average here, just now coming up to touch the 200. EMA and SMA, they're together. They're riding together right here. And now they're joined by the 50. So as long as this continues to angle up, I'm going to look for that break. I'm going to look for this all to continue to move higher. We will continue to have some resistance at 41.75. Now, the way that I'm counting this, I have 1, 2, 3, ABC, 4. So we are within minute 5 of minor 5. So we're getting pretty close, in my opinion. But again, I would like to see minor 5 at least equal minor 3, and that's 42.06. If not, get above it and make it clean. So what can we expect? That it's likely going to be wave 5 that will extend. Wave 3 put in a beautiful, beautiful extension. So, and wave 1 at this point would be the shortest wave. So wave 5 definitely has the potential to get itself up to 4206. And then we have 4295, but 4250 right there. And then we have that 4295 number above. Moving over to the NASDAQ. Same diff, same change. Where I brought wave 3 over, let me pull this out to the 4-hour chart so we can see it. I brought wave 3 over and then put wave 4 because it was the same pattern. And again, I can go over to the NDX and we see that same, excuse me, 3 waves down here. Clean 3 waves down. And when I saw that yesterday, that's when I started to make my changes. But I continued to think that this 1 and 2, and it worked here because there was no threat to the beginning of wave 1, or the start of wave 1. Whereas in the S&P, there was. So here, clean. We are already above the high of what is going to be wave 3. And so let me go back over to the futures market where I have it all labeled out. So same deal that we had ABC X ABC. So both produced double ABCs, did not both markets did not necessarily threaten, but here again in the NASDAQ E-mini, we did not get that threat of overlap. And so it was very clean and remains clean. Same process here, 1, 2, 3, 4, but here we are kind of well into the whole thing is minor wave 5, but we're in minute wave 5 inside. So here we have minor wave 1 is equal to 382 points. I'm going to go back over to that 382 points we have here. So bearing that in mind, we got to look at the NASDAQ, and wave 5 would be equal. So we have the equality at 13,383. That takes us above here. Wave A we've already cleared, so it's our first level, 13,383. So we're getting pretty dang close because we got up to 13,368, which equaled the high of wave 3, and now we want to get above it. Now, if we're taking a look at where minor wave 5 would be equal to 0.618 of minor 1, that has already been exceeded, so that's out. Where we also can include where minor wave 5 would be equal to 1.618 of minor 1, and that number is 13,620. And we have an outside for wave C at 13,626. Can the NASDAQ get there? Yes. But I would think that what's going to happen is that minute wave 5 of minor wave 5 also extends. And we get a very strong and powerful rally to finish it up. Again, it's going to be the same catalyst. If something positive comes out of that debt ceiling discussion, bam, hit the buy button. If CPI and PPI show advancements in the battle against inflation on the consumer level and the producer level, boom, hit the buy button. So the catalysts are there. The last number that we have is that in minute wave 5, so if I just kind of open this up, we can start from there, and I can go on the basis that minute wave 1 down here, and now I can compare it to minute wave 5. And so I again have 13,387, where wave 5 equals wave 1. So that's going to be very comparable to 13,383. So we have 383 to 387. Could it finish there? Yes. Excuse me, it can. Because we're looking at the strength of the market's going to come from a positive result or some positive news about the debt ceiling or positive results from the CPI and the PPI. If those numbers are negative and we don't get the good news out of the discussions, well, I'm going to say hit the sell button. That's what I think the algorithms will do. So the second level number is where wave 5 would be equal to 1.618 of wave 1. And that number comes in at 13,000, I did say 468, 13,468. And that's up here. Is that possible? For sure, it's possible. So I've been discussing 13,400 as would be a pretty clean destination for the NASDAQ. That actually remains in place. So moving averages are remaining in alignment for a continued upside move. I think we are in these final stages. I am very happy to have cleaned this up. I am also very appreciative of those of you that will tell me, call me out on what you see. I truly do appreciate that. What I don't appreciate when that happens is more of a righteous type of a attitude. But a straight attitude and saying, hey, these are my findings, what's going on with yours? I think you have a rule violation. That's great. Being kept in line is what it's all about. Having an open conversation about it is actually what it's all about. So I appreciate the folks that did come in and not just blow me off, but actually added to the conversation and brought about a positive result for all of us. So again, thank you to those that did comment. I appreciate it very much. And I'm going to continue to just monitor what's going on, but I am going to complete this for today. What I can add also to the picture, just some quick adds, is that gold remains very volatile and very active, now remaining above that 2,000 level, which I think is a positive. The dollar picked up a little bit, very, very little towards the end of the session today, spending most of the session down. The treasury markets were down for most of the day, ticked higher towards the very end of the day, and then added a little bit more because they closed down regular session. It was the after session, which they then pushed up a little bit and put a green spin on it, as you can see. All right, that's going to be it for today. Our next update will be on Tuesday, May the 9th.